Good morning, ladies and gentlemen. Welcome to this week's sentiment analysis. This is for the week of November 9th. Let's get straight into it, looking at the Human Emotional Sentiment Analysis 7-day rolling average. The news cycle has certainly been tediously distressful, daunting. There are a number of other words that probably should never see the light of day or the video, but we'll leave it there. The level of manipulation being pushed by the media on a global agenda is disturbing. Let's just put it out there. It's outright disturbing. We can clearly see that in the chart in terms of how that data has been analyzed. If we go back to the actual highlight of the year so far has been the August-September range. Well, basically, we can see we had 1 point of absolute greed that was really nice. And then the rest of the market just has remained, well, quite depressingly fearful. Of course, we all know why. Fear sells. Fear makes money. People buy bad news. They don't buy good news. They don't buy the good stories of the firefighter saving an old woman's cat or the good things of neighbors helping neighbors. That's not how the news cycle works. But what this does tell us, when we look at these kind of reports, it tells us that there's weaknesses within the system, that there's political motives being strung out through the entire agenda of the news cycle. And those motives have an impact on markets. When you get to reading the Patreon report that I put up, that will become obvious in terms of how those motives get spun into narratives that begin pushing ideologies. Some of them, of course, are good, some are bad. That's for the individual reader to figure out. For the purposes of what we're discussing here, those motives translate into real-world dollars. So let's really begin to go through this detail. The big thing is right now where fear is at. It's anywhere from 70%, 75% range, so there's a 25% greed level. That doesn't, of course, show up on the chart very readily. You look at the chart and you see fear has a huge spike where greed has a low amount. In a way, this chart hides that factor, but that's the normal representation the market looks at things. And it's through that normal representation that we are able to scalp off the real meaning of just what is being presented in the news. 80% of the news is negative. 20% of the news is good. Finding those good gems is a whole different process. But as we progress and we continue looking at the market and its approaches within the news cycle, always remember to look at every single news item with a clear and present purpose. That is, what is that news article really trying to sell? And yes, I said sell. Distinctively, there is an agenda in every news article, even in the good news articles. I've spoken about this before, where when newspapers went to print, that print had costs. Now, mass media with the internet, those costs are counted in clicks. How many clicks, how many ads can be served becomes the transformation point of what news gets pushed. It's all about the end result of them making money, meaning the news media companies. Even when you go to the bigger ones like New York Times or CNN or MSNBC or any news publication website, you will always see that very specific derivative content. The article itself, in relation to the level of advertisements on the web page, is a clear indication of exactly what that publication's intent is. That is, do you see more ads than article, or do you see more article than ads? There is at some point a middle ground where you have to pay the bills. Realistically, only governments get to run debt into oblivion with no fear of the consequences. Real-world businesses can't live like that, and sooner or later, somebody has to pay the power company. So you have that balance, and that's going to be expected in any website you visit. But it's that balance that tells you their true ulterior motives. When you see an article that is rated as not having very much value, not having a significant amount of material, but the page is loaded with advertisements. Or a second technique is they'll take an article that might fit on one page, but they'll put it on 3, 4, or 10 pages with 2 paragraphs each, deliberately to drive ad engagement as you flip through the pages, making their statistics look more inflated than what they really should be. All of this fits into the human emotional sentiment. All of this connects to the ground layer of their financial structure. So let's now move forward into the next real world market, where it isn't driven as much by propaganda, but more by financial markets. We see on the screen now the numbers, the actual statistics for all of the portions. And we can see that the strength is dropping quite drastically with respect of the 1-day versus the 30-day average. 62% strength driving fear versus only a 50% strength on the 30-day chart. This is why the rolling averages are so important. If we look at the 1 day, it looks chaotic and insane. But by averaging out the fear and greed over different cycles, we could actually get an assessment of how that really plays in the true economic value of what we are looking at. Looking at the Forex market 7-day rolling average. This is actual market data, and it is really quite interesting. We can see a more normalized fear and greed pattern. But what really stands out here, and this is the critical point, is the strength metric. We can see that the push between fear and greed is extremely minimal. That is, the countries themselves at the economic level, they are almost neutral most of the time. Once in a while, you might get an outlier where the strength is more so in one direction or the other. But for the most part, the economies operate in a near balanced state, where tiny things might affect a country, such as the Australian defense deal, but in the bigger picture, while that brings Australia a big level of bonus, the rest of the actual market doesn't really see that much of a difference. So in terms of the global country economies, this is really a good indicator of what we can expect, of how we can look at the world. And we can see that despite what the media is pushing, when we actually correlate it with the country's economic models, it's not that significant. Now, the downside to this is it does downplay human suffering that goes on in the world. And there are a minimum of 1 to 2 billion people worldwide that don't get the luxuries of the Western nations. And that is a problem for our species, but one that is a critical assessment of our species. From the standpoint of the economies, it's not insurmountable, but it depends, of course, on having governments that do the right thing. And if you've been following my Patreon over the last several weeks now, where I've talked about various stages of AI manipulation, control, surveillance, and censorship, it becomes clear where the global economy is pushing the world. And I say this in a context because it is literally the backbone money system of the world is wrapped up here in the Forex market. This isn't individuals. This isn't companies. This isn't portfolios. This is actual raw data from nations like the European Union, the United States, or Canada. This information correlates to exactly how our world functions. So it has a very significant role and place to play. It is quite critical, actually, in terms of long-term financial investments and even looking at the stability of our society as a whole. Moving on to the stock market. We see the same thing with the Forex market. The strength is extremely minimal. Even though the stock market is shifting towards the greedy side, the actual amount of strength of that greed really is negligible. And that is a critical point of understanding in terms of examining the stock market along with and correlated to the Forex market. Okay, so we see that the stock market is tilting to the greedy side. Whereas if we look at the Forex market is tilting to the fear side, slightly fear neutral. But again, strength. The strength is so negligible, so minimal. That is an important facet between both of them. So let's look at the 7-day stock market, which is really strange. We can see straight off the bat this weird push, a rally that sold off a lot, and it correlates directly to a greed session. But it's different than other greed sections that didn't have that rally, which is really interesting when we look at the data, when we look at the correlations with the stock market itself and how the global indices. So whatever happened in the mid part of September caused the market to respond very favorably. And a lot of that is the CPI, the GDP, all of that kind of stuff that went on. And that really is the interesting part about it. But now for the stock market, at least from the standpoint of the U.S. government, this is rather interesting. Even though the strength is next to non-existent, the fact that the market was in a greedy state, despite the fact that the U.S. government was completely shut down, says a lot. The economics behind that shutdown is really telling. But these are just the kind of things we can pull out of different sentiments. Now this is people's 401ks, their retirement funds, or even just people individually invested in a different index, like an S&P 500 or the Dow Jones. So from the standpoint of the market, the participants of the stock market indices were favorable for the events that went on in October. That is a rather interesting standpoint where when you look and compare it against the JRSA model, you see that all throughout October was a high fear level. So moving to the next chart, the cryptocurrency market is really an interesting one because it usually counters the Forex or the stock market, but it's actually mirroring the JRSA analysis with a higher than normal fear rate, but the strength. That is the telling part. The strength is actually significantly higher than both the Forex and the stock market. These are the wild cards, the adventurists of the market. They want the bleeding edge technology and they want to be out there in the front of it all. Now, this is an analysis of 1,300 different cryptocurrency pairs to examine where they have been at in the market. So let's actually look at the chart. So here we see the cryptocurrency 7-day rolling average, and we can see that it is more of the fear side than anything. But the strength, this again really tells the story. Just because the market is trending fearful, the strength isn't all that significant. And that is the real important part. My takeaway from this is that the market is being cautious. Whereas back in September, the market was being aggressive. But if we look at October, during the government shutdown, we actually have an unusual situation where, unlike the JRSA or even the stock market, the fear level of the cryptocurrency market, the most volatile market, really wasn't that significant above neutral. This section here is actually an interesting representation of that. And we can even see that the strength itself was very minimal. So again, we can see that the government shutdown didn't have any major impact, at least not the way it was portrayed in the media. That's really a very significant point from the whole situation. As we look at this entire framing, we have a very clear representation of exactly what and where the market is going. For the most part, the market is stable, but cautious. That, I think, is a real important takeaway of all of this information. There's no huge shifts in strength, one way or the other, in relation to what is actually going on in the market. And even when we do have the 1 point of major downward strength, and even recently we have another point, the actual levels of fear and greed correlation with the crypto market compared to the other markets are conflicting and divergent in the story they are telling. It's not something to ignore, but it's not something to panic over either. The combined report is skewed because of the media, and I may end up still having to rebalance the media impact versus the financial markets. We'll see. That's kind of one of those wait and see moments to see how to get this balance correct. Share your thoughts on that though. What do you think in terms of the balance of each of the market's weights in the totality of the total representation of where we sit right now between fear and greed? Right now we carry a 59% 30-day greed, 61% over the last week, but the strength is about 15%. Overall, that is a cautious step, a very direct and deliberate cautiousness that we need to really pay attention to. Looking at the actual chart, we can see quite interestingly, again looking at October when the U.S. government was shut down, we see the correlation of the JRSA information in this chart, but we also see the financial information pushing back and neutralizing it. We could even see the flat line and the strength regarding just how that poised out. So from the standpoint of the overall market, while the news cycle did have a direct impact, and that can't be denied. The impact that they wanted it to have was significantly less. And I think that is a real testament in terms of the human mind and its ability to adapt to the onslaught of manipulation that we have seen lately in the news cycle. And I'm going to explicitly stipulate that in terms of the 250 different news resources I pull daily. And I take a wide range of global sources to calculate this information. So this isn't leaning one way or the other. I try to pick sources that give me a very balanced viewpoint from across the political spectrum. This also isn't just Western media. Because I do use global resources, I try to filter out and filter down Western ideology in the mathematics so that I get India, Russia, China, Hong Kong, Taiwan, Beijing means China, Singapore, France, Germany, parts of Africa, Italy. I have a large wave of resources that get pulled in for this data. And I am always looking for resources to add to the system to try to get a better and cleaner picture of exactly what kind of data I am collecting to help get an idea of not just the manipulation, but the local communities in terms of what they need on a daily basis, what their pulse is. And I try to articulate that in numbers. That is the whole point of this chart, to give me the picture of exactly what everything looks like when it comes together. Hopefully it does a good job of that. Let me know. Have you found this information beneficial? Does it correlate with what is going on in your local economy? That, I think, is going to be the biggest telling sign in terms of the beneficial nature of this content. As we continue for next week, I think the results are very clear. I wouldn't get overly excited, but at the same time, there are definite opportunities. There is at least a quarter of the population that has a greedy perspective, looking at opportunities to make profits from. That's important because that still means there is a clear consensus of being able to survive in the market. From the standpoint of the techniques, the strategies, think out of the box. I really think that's going to be the future of trading. Not following blindly, just slapping a Bollinger Bands RSI on the chart, or even with DCA. I think there's going to be a transitioning point as we move forward in trading, as more and more people become a daily part of trading. Innovation is going to be the critical standpoint. I think that really is the underlying theme that we see. The markets aren't changing. Human ingenuity is changing. Back in the 70s and 80s, when trading first became public to the masses, there weren't very many people in it. So simple tools worked out of the box. They didn't need to be ingenious or innovative beyond the individual that created them. You could put a Bollinger Bands, RSI, or an ATR on the chart and have it perform reasonably well with a 60 to 70% win rate by itself. Now, as more and more people enter the market and they bring their own belief systems, ideologies, experiences into the market, we see a pattern of innovation where people start looking at the market differently. That is, their edge isn't the tools they use. It's the way they see how to use the tools. That's the same for you, me, or anybody in the market. Your edge is not your tools. The carpenter's edge is not the hammer he carries on his belt. It's his ability to use that hammer. That's the one thing that I've noticed over the last 6 years of being in the market and teaching people, teaching techniques, teaching thinking. People get comfortable with tools and they don't expand beyond the tool. That will lead to losses. I can teach you 1,000 tools, but if you don't take the next step to figure out how to combine the tools in a way that resonates with you, you won't be able to profit. That really says everything. No number of courses on the market can teach you about yourself. Trading is a journey. It's a journey of discovery of you. I can give you every tool on the planet, and it's not going to matter until you discover what works best for you. For example, with the floating grid bot, for me that has been an incredibly powerful tool. It resonates with me in terms of my risk assessment. It speaks to me in a way of managing my own portfolio, but it's not for everyone. Some people don't like being that invested in a single asset, and that's fine. But that's what makes the market so unique, so distinct. That's what drives the market, and that's why the institutions fear the most. The institutions are very good at stop-loss hunting, liquidity grabs, liquidity sweeps, whatever you want to use that describes their behavior. What they don't like is when somebody comes in the market playing the game by their own rules and not the rules that the institution is constantly putting out there. You should use this kind of a stop loss. You should put your stop loss here below this point. 1 million people follow that kind of information, and 1 million people lose money because they didn't innovate in a way that resonated with their own personal lifestyle and experiences. As you progress forward in your trading, not just next week, but next month, next year, take this information and think about how you can look at the market differently. Take what has happened in your life and see the opportunities that nobody else has seen yet. Share your thoughts and leave a comment. Let me know what you think. Thank you for watching.